there's obviously a huge amount of CapEx investment for AI infrastructure build out. The numbers are phenomenally large. I think there's a lot of rationality in that build out. I think I would believe in the long-term value of what we can realize when it comes to productivity and kind of AI driven products and the infra that needs to run on. So the build out has to precede the realization of that value. And I think the rational thing for the big labs in the US is to be investing heavily. Today, despite there being some circular dealings, the majority of that investment is still being made from the strong cash positions of very profitable, very large companies. I think as profits would be seen to fall, as investment would be seen to shift to more kind of debt financed and more of those circular dealings kind of take a larger share, then I think, those should be some kind of stronger warning signals. But then where I think we'll see certainly a nearer term kind of correction is really on a lot of application layer AI, where I think there's been a lot of inflated valuations where hyper and expectation is far exceeding reality, high multiples on low revenues. And where I think we'll see kind of probably in the near term, there'll be the first wave of companies that were very well funded 1, 2 years back off the back of some very fast growth. But now we're kind of, with the market a little bit more visible, their growth is probably stalled, their churn is probably significant, the defensibility that they hoped to kind of build into has maybe not materialized, and there'll be some investors counting some of their first kind of losses of this wave of rush to invest in AI. And I think that will also, maybe look like whether that's looking like a slight deflation or bubble bursting or correction or whatever terminology. I think we'll see a lot of AI app kind of write downs. And that may also, affect investor sentiment to a significant degree.